Good morning, good morning, good morning, all you lovely, wonderful people out there on this beautiful, cloudy, overcast Saturday morning. Welcome to the show. Welcome to the Open Door Show. My name's Richie Clapson, and I'm here with the other half of Property CEO, Mr. Ian Child.
Good morning.
And look at that, he speaks as well. Guys, it's great to have you here. And just in case this is your first time, let me tell you what you've let yourself in for on this Saturday morning. Our aim is to give you about 45 minutes of non-stop positivity. And it's all around the theme of, business and property development. Isn't that right, Ian?
Certainly is. So Richie and I run a company called propertyCEO. And basically our day job is training people how to become successful small-scale property developers. Many people, of course, quite like the idea of developing property, but they often worry it might be a bit risky, a bit complex. So essentially our job is to give them the support and the training that they need to do it as safely and as successfully as possible. We also think that right now there's kind of an amazing opportunity kind of lying just around the corner. So we think that's going to create a lot of wealth for developers. So we kind of want to help people find out all about it and see if development might be a good fit.
So there we are, global pandemic, recession, it's all going on out there at the moment. But the interesting thing is, if you're in a zone of positivity, which you are today within these four walls or four virtual walls, whatever you want to call it, recessions create great opportunities, and that's for certain. And those in the know that. But of course, you've got to seek them out rather than waiting for things to settle down. Seek them out and go and get them. That's what you need to do as entrepreneurs. You must be entrepreneurs, otherwise you wouldn't be sat listening to us on a Saturday morning, unless this is by mistake, in which case, welcome by mistake. So look, we're going to be serving up predictions. A guest, we have a guest today, so he'll be on in a minute. Build him up in a minute, actually, when we get to it. Possibly a bit of training in terms of the answers we give, but above all, we have some fun. So this is a fun zone, so we have a bit of a laugh as well, which is great. Happy to take questions as we go through. Please put them in the chat box and we will pick them up as they go through. What a terrific audience here today. We've got a whole stack of you on. I'm never going to read all these names out, but a few shouts out to a few people. So Yoko, Lorraine, Kathy's on, Paul's on, Chris is on, Joe's on. Actually, it says Joanne, but we know her as Joe. So she's gone a bit posh this morning. There you go. Look at that. Debs is on. Good morning, Debs. Gavin, Ashley, Mike. Mike is actually an architect. He's going to be a guest coming on in a few weeks' time. So Mike's on. He's probably checking it out to see if it's going to be any good for him. Ranjit's on Property Investor News. Ranjit's here on Property Investor News, and we have to keep saying Property Investor News at least 7 times during the show. So I've got 3 out of the way now.
Morning,
and by the way, if you don't read Property Investor News, it is worth a read. It's a pretty serious magazine for those interested. Some of our students are on. Pardeep's on. Simon's on. Trish is on. Stephen's on. I'm never going to mention you all, guys, because otherwise I'll be here. Good morning, Dill. Dill's going to come on the show. He's a party wall guy. He's going to come on in a few weeks' time. He sort of pushed his way into it the other week, but that's okay. We like that. We're happy to have people on. Dave's on, Raj is on, Alan's on, Yvonne's on, Dom's on, etc. And a few of you are saying good morning, which is great. Love it when people say good morning. Morning, Ian. Richie says, Trish. Pardeep says good morning, gents. Dom says looking good. I think he was referring to me, Ian, not you.
Really?
Because you still need
I know that Debs was saying, just going to fetch a woolly jumper, hat and gloves. It's a bit chilly on the coast where she is today. But to be honest, Debs, it's a bit chilly here as well. It's all turned a little bit.
Go on, Ian, sorry. I was going to say.
Oh, no, it's warm where you are, actually, isn't it? I forgot. You're in your little metal box.
I'm in my studio and it's lovely and warm. The only thing I was going to say to Debs is Debs says it's a bit chilly on the coast. Debs, go back indoors. It's much warmer indoors. You're going to enjoy that. So yeah, guys, lots going on. Joanne says ha ha because her real name is Joe. Good stuff. Excellent. Loads of people on. Ritesh. Thanks, Ritesh. Ritesh says, good morning, guys. So here's a thought to ponder over. In case this developing lark is hard for me, I might consider comedy. How about this for starters? I hope today is not taxing. How am I doing?
Right.
To be honest, Ritesh, you need to work harder, and I think you need to get development going. So please put your tax questions in the question box, or property development questions to do with anything about setting up your property business and so on. Now, just to pick up, let me just check. Edward was on, wasn't he? Edward, I think I saw you on there. Before I do that, while I'm just looking for Edward, please can you give me a wave? Put your hand up if you can hear and see Ian and myself.
That would be funny, wouldn't it, if they couldn't?
What I've been rattling on for ages. Good, guys. Thank you very much. Thank you very much. Jennifer's on. Marilyn's on. Alan's on. Good morning, Alan. Alan's one of our students as well. Jenny's on. Cole's on. VJ's on. And I'm mentioning several names because there's people with double names here, which is terribly confusing. We had a question that Edward brought up on Tuesday's show, I think it was. Edward, you brought a question up. And the question was, he had a half-acre greenfield site. Could he turn it into a horse livery? And I said, oh, I don't know. That's an interesting one. So it stumped us a little bit. So I said, right, we'll go and find an answer to that, I said to Ian. But before we could do that, Ed, someone else on the show, Yvonne, who's an architect, kindly submitted us an answer. Yvonne's actually a student of ours as well, which is great. So she said, by the way, so I'm going to summarize this because it's a long response, Edward, but she basically says, it's a common misconception that a horse business is classed as agricultural. She said it normally wouldn't be as a stud, but it might be, but check with a planning consultant. She said a livery yard is a business and would attract traffic, etc. And that'd be a change of use from a field of agricultural. She goes on to say it is possible to put up stables in a field without permission, provided they're movable and they've got to be of a certain size, etc., etc. She goes on to say you can actually put stables up in your garden, depending if they're of a certain size, and etc., etc. So a long response there from Yvonne, longer than what I'm going to read out on the show, because we'll be here 10 minutes doing that. But Edward, if you're interested, or if anyone else is interested, the architect that put this in is a lady called Yvonne. Her company is called Lees Monday, Leesmunday, leesmonday.com. It's an architectural practice. They're in Guildford. So if you're interested, look up Lees Monday. Yvonne's one of the partners there, and you can always email her. And Edward, you can always email her. If you want me to connect you up with her, Edward, drop me a note on the chat box and I will do that. He says, wonderful, Edward says already. Excellent. Good stuff. Trish says, we're having audio problems, but left and back on now. Okay. Well, hopefully, Trish, that's okay. I can't stop the whole show just for you. Right, guys, we've got a guest on today, so I'm assuming you'd like us to bring our guest on. Give us a hands up if you'd like us to bring our guest on, or you'd like us to rabbit on for another 10 minutes. Hands
got
up.
a hand shot up there.
Good stuff, good stuff. You're quick as anything, you guys, today. Right, guys, you asked us, so it's your show. This is not ours. We just host the thing. You asked us to bring on a property accountant. An accountant that's experienced about property, that knows about property development, that knows how to set up property companies, that's engaging and interesting and full of knowledge. We looked around, I'll be honest, we looked around, we seeked high and low, and we struggled. But then Ian said, what about Ray? So we've got a guy called Ray Khan. I don't think he's got a lot of knowledge, but he was available. Anyway, one of my usual introductions. So we've got Ray Khan on today. He runs a company called Fresh Accounting and Legal. Actually, he does all of our accounts. I've worked with him for many, many years. Very good friend of mine as well. So let's see if Ray is available for us. Just bear with me 2 seconds. I just got to flick across. Okay, Ray, can you hear us?
I can hear you, Richie. Can you hear me?
Yeah, we can. Ray, can you turn your camera on for me?
Morning, guys. How are you?
There he is. Guys,
Good morning.
can you just give me a hands up just to let me know you can hear and see Ray?
Yeah, I can see you, Richie. I can see your hair's growing a little bit, which is obviously why you can't go to the barbers right now. So I hope you're keeping safe.
Somebody always has to mention it, don't they? They always have to bring it up. Unbelievable.
Right, this is a serious show. This is not for humour and taking the mick out of me, because I can turn your camera off anytime I want.
Oh, I appreciate it. Thank you for inviting me, guys. I'm honoured.
Good stuff. Guys, so Ray's here. Ray, can you just give us a quick introduction of who you are and what your company does, just very quickly?
My name's Ray Khan, as you've been told. I own an accountancy business in Southampton. I've been an accountant for 27, 28 years in business. During that journey, I've invested in property, bought my first buy-to-let in 95, ended up with 30 buy-to-lets by 2005. Went through a messy divorce and lost half of those, but now moved on to property development, which I enjoy doing. I bought my first site 2 years ago and developed it into a a nice little 10 new home unit. So learned a lot, love doing it. It's just something new which allows me to also do accounting.
Good stuff. There we go. So he seems to know his stuff. Ray, you ready for a few questions? Let's fire straight in at them. So I've got a question here from Alan. Alan says, good morning, my tax question. Inheritance tax, IHT, can a common law wife get spousal assumption? And does that exemption count for the whole of the estate?
I'll be honest, guys, inheritance tax isn't an area that I'm a specialist in. However, if you give me that email from that whoever sent that in, I'll put them in touch with a specialist that I work with, rather than give you advice on inheritance tax.
Good stuff. And I think that's really good. I mean, I threw my hands up in horror, Ray, that you failed at the first post, but that doesn't matter. I think the important thing...
I thought I was on Saturday Kitchen. What's going on?
I think the important thing is, guys, and
a biscuit and a banana. What can we make out of this?
We have to be just careful with Ray giving the right advice. So, Alan, if you would like Ray to put you in touch, he's offering to put you in touch with someone that will answer that in detail. Alan, can you just send me a message across to say yes, please? And Alan will share and give us your best contact details in the chat. And because it's all private, I'll just pick them up and I'll connect you up with Ray separately.
Yeah,
okay.
Richie, I work with a real specialist in Southampton, Darren, and I'll put him straight on to Darren, and that's all he does, inheritance tax.
Great stuff. Alan, what a service. That is terrific. Okay, Ian, have you got a question we can dive in with?
Yeah, we've got one that came in during the week from Pam. What are the biggest mistakes that you see property people make when it comes to tax or accountancy?
What's the biggest mistake people make? I suppose from my point of view, it's people leave it too late to engage with someone who knows how to give them advice. Most people think accountants, or I'll see them at the end of the year when I've got my accounts ready, by which time it's normally too late for any accountant to do anything. Value may have been added, profits may have been made. So I'd say one of the biggest things I would say to anyone is try to engage with someone earlier rather than later. Makes a massive difference if you can do a bit of planning with someone who's got experience of it. So it's worth making that investment. You're investing in a property business, well, you need to invest in advice, and the sooner you can do that, the better.
Is it fair to say, Ray, that in terms of not all accountants are created equal when it comes to property? That there are kind of, you want to be engaging with a property specialist from an accounting and tax perspective?
Yeah, I mean, that's as a generalization, you know what you know, and people, if they don't know about property, they shouldn't be giving advice. All I would say is most accountants run accountancy practices where the aim of the game is to get hundreds of clients, and then you don't have time to be a specialist in any area because you want to be a general accountant. And if you have 1,000 clients, you don't really have the time to get involved in giving bespoke advice about a sector. I suppose, as you know, I'm different because I never wanted to be a full-time accountant just doing accounts. My speciality is business and tax. So, you'll find plenty of people like me in every city. You've just got to ask the questions, ask solicitors, ask bankers. They'll know the people they'll know accountants that are actually property developers.
Great stuff.
So that would be my advice.
Okay, Ray, next question. They're going to come thick and fast today. A question from Trish this morning, Ray. Good morning, Trish. Trish is one of our students, which is great. Got a lot of our students on here today. We love having you on here as well. I have a company which is not related to property. Can I set up a subsidiary company, or should I set up a new company, then an SPV for each project?
The first part of the question was, I already have a company, but it's not a property company, correct?
Correct, yes.
Well, I wouldn't recommend putting a property deal into a company that's already trading, doing something else. If it was a dormant company, you could obviously just change the SIP code and carry on using that company for property, but companies can be set up for £50 now. So I would set up a brand new SPV with and start afresh. Subsidiaries comes on to whether you should have a group holding company, which we can maybe discuss later if anyone wants to know about that. But every project I would do as an SPV, one, because it's cleaner from the bank and the finance point of view. They like the fact they're dealing with something clean, no liabilities, no history. Funding probably becomes easier. Also allows you to do JVs with partners if it's a fresh new co, and you can design it all at the start.
Great stuff, great stuff. Okay, Maria's got a question here. She said, I loan my company to buy properties. Can I withdraw the loan at any time, or do I pay my tax on profit and then take out the loan?
How it works, Maria, is that you can put your money into the company and it's treated as a director's loan. Sometimes you can convert your loan into equity, which is shares, for the balance sheet. However, if it's purely a loan, then I would say, yes, you can take that out at any time, tax-free. However, you have to bear in mind, corporation tax liabilities have to be paid. So, you know, you could pay your tax and then whatever's left, take it out because it's your money, tax-free. Mindful of the fact that I would say to anyone, make sure you use up your lower rate band of personal tax before you take your own money away. In a sense, what I mean is if you don't earn any money from anywhere, you've got a £12,000 personal allowance, make sure you use that up because that's tax allowable against profits. So I hope that helps.
Yeah, great stuff. Hopefully that does. That does. Keep the questions coming, guys. This is good. This is good. Ray, a question from Ritesh. Ritesh says, Ray, which is great because he knows your name. He says there's a lot of chatter about transferring to portfolio from personal, transferring probably a portfolio from personal to limited SPV. Not looking for tax advice, but what are the pros and cons? So what's the pros and cons of transferring a portfolio from a personal to a limited?
The reason for doing that, it could be future-proofing it for inheritance tax, getting it into an entity which allows you to bring in other family members rather than a house owned by Mr. and Mrs. The big downside, unfortunately, is stamp duty on the transfer. You can roll the gain you make over into shares into the limited company, but the costs involved in doing it really only make it worthwhile if you have a portfolio of 5 to 10 houses. And then remember, if you transfer a property into a limited company and decide you want to sell it, the taxes are actually going to be higher within the limited company. Whereas if you own it individually, you get your personal exemption each year of 11,000 for you and the wife maybe. So I'd look very carefully at just transferring one property into a limited company. There are other examples of how you can transfer lots of property into a limited company with specialist planning and not pay SDLT. Again, I can talk to people individually about that. So SDLT can be avoided if you do some tax planning and transfer them over.
Great stuff. The question you answered just now on with Trish. Trish says, great answer, thank you. So she loved that. Ian, do you want to go for the next one?
Got one here from Debs. Can you add a holding company to a group of SPVs already in place? So if you've got various SPVs around, can you then introduce a holding company above the top?
Yes, you can. What you have to be mindful of the fact that those companies have a value. So it's best to do it at the start where you haven't crystallized any profits, created any value, because technically there's a value of those shares. So let me start again. Trish is correct? Yeah.
Oh, this is Debs.
Debs.
Sorry, Debs. If you own 100% of the shares, they have a value. If you transfer those now to a holding company, you technically have to sell those shares to the holding company. So you want to do the planning as early as you can on that, and especially if you haven't finished projects where you can say there is a value. You know, so yes, you can, but you need to get on with it before you create value in all those SPVs.
Good stuff. Good stuff. Debs, hope that's answered yours. Let's pick up a question we had in the week. And guys, you can always submit questions pre the show. We can pick them up. David submitted a question. David is on. David, good morning to you. That's David R, because there's a few Davids on today. David says, could you ask Ray to explain PropCo versus OpCo arrangements? And when is it worth entering into an LLP between myself and my company to make the best use and capital allowances from properties held by myself and my company? Two questions there.
Okay. Hi, David. PropCo, OpCo. I think you're talking about a situation where potentially you own a piece of land and you're not having to raise finance on it so that you can develop that land. Because if you want to do a property deal which involves borrowing money from the bank, they may not particularly like you having the title of the land split between the two companies on the basis that they want to hold their charge. But OpCo can be used to develop the houses you want to build and ring fence that from the asset. Because an OpCo is an operating company which is at risk. It may, have subcontractors. It may have liabilities. If at any point it went into receivership, the PropCo could retain the asset because it's a separate entity. I can talk more on detail that with David at a later point if you put him in touch with me. LLP is a limited liability partnership. Again, it's basically a partnership, as in two individuals. Say Richie and Ian, you're a partnership if you're in business together for two people. Limited liability allows you to put a wrap around it to, again, limit your liability to what you've put into the business. Whereas a partnership is you're liable, you can lose your house if you're in a partnership. So an LLP is used for property deals just for able to extract profits into an LLP. And an LLP can do things like pay less taxes, in the sense it can have company cars that are not taxable in the way benefits in kind work. It is quite a technical area that I'd need to know more detail out, but in principle, you can have an LLP as a member of an SPV, so to extract profits into the LLP. So again, I hope that answers that question, but if David needs more detail, you can put him in touch with me.
Okay, so Ray, that's a fairly detailed area by the sounds of it. David, if you're interested and you want Ray to give you a bit more time than we've got on this show, again, as we said earlier, pop me a message in the chat box with your contact details for Ray. They'll be private, no one else will see them, and I'll connect you guys up. Okay. By the way, for Deb's answer just now, she said, yes, thank you, Ray. So that was good. That was the question we asked. I can't remember Deb's question, gone right up the list there. Okay. Ian, have you got another one to go for?
We've got one in from Daryl, who says, if in a JV with a partner on a regular basis, should an SPV be set up for each and every development, or will one SPV be preferable for tax reasons? And then he goes on to say, does your recommended structure change if projects are to flip, to rent, or a combination of both?
Yeah, thank you. So it's a JV with an existing partner. Is that I'm not sure if you know, but whether that's a limited company or not. Let me assume it probably is a limited company JV, joint venture.
Okay.
I've always advised clients to, every new project put into an SPV, the shares of that SPV for a new project can be held by the joint venture company, but I'm recommending to a lot of clients that because life changes, people do different things, hold your own holding company individually that holds shares in separate SPVs, so that if any point you want to extract yourself from the deal or bring in another JV partner, it's just easier. So you've got a lot of flexibility, but again, if you talk to your accountant or business advisor, they can tell you can do all those things. Okay, you might be mindful of cost, but you can set companies up pretty quickly and cheaply. You might do a little bit of share work at the start, and I'm talking about £300 to £400 worth of work, and then you've got your structure set up. So you don't have to spend thousands at the start. We're talking to spend hundreds, which may save you thousands at the end. So again, that's what you've just explained can work. So yeah.
Brilliant, thanks. Yeah, and Daryl has added, yeah, it is a limited company JV, so that's brilliant. Thanks, Ray.
Yeah.
Daryl, hopefully that's answered your question. Right, Jenny, good morning, Jenny, to you. Jenny says, please could you comment on the transfer of personally held property into a limited company and a limited liability partnership, transferring the beneficial debt to one and the income to the other.
Okay, so she wants to transfer the beneficial ownership of an asset into a limited company. Issues that she would have to take into account, obviously, are that you're technically selling the asset to the limited company. So there's a capital gains tax issue straight away, and there'll be a stamp duty because the asset will be transferred from a personal asset to a limited company asset. Albeit you can roll over some of that gain into the shares of the limited company, but the SDLT you can't avoid. The other part of the question was what, Richie? Beneficial?
Just bear with me 2 seconds because I'm scrolling up and down with loads of questions. Go back to Jenny's question. She says, transferring the beneficial debt to one and the income to the other.
Again, that's all doable. There are various Inland Revenue rules about that and various forms that you have to fill in, which again I can give her advice on separately. But yes, that's doable, but there are a few hoops that she's got to jump through so that the Inland Revenue accept that income is not going to the asset holder. But it's doable, yeah.
Great stuff, Jenny. You've got to jump through a few hoops, so be nice and flexible for that. Just as a quick aside, what you're doing, Ray, is great. Raj had a question just now, but you've already answered his question with answering someone else's question, so that is terrific.
Like it.
Yeah.
Got one here from Jennifer. Is it best to set up a limited company before you buy your property at auction?
Not necessarily. You can set a limited company up literally within a day, same day. I mean, you pay double, you can have it the same day. Normally, you can have it in 2 days for £50 to £60. If you're at an auction and you put a deposit down on leaving the auction, you may want to have a limited company set up. You have to insure that property on immediately leaving the auction. So you may want it put into the limited company immediately on day one. But nothing legally has happened until you complete. So the answer to that is yes, you could. No, you don't really have to. And it's an easy thing to do very quickly. So I would probably wait till you know you've got a deal at auction and then set the company up immediately the same day.
Brilliant. Thanks, Ray.
We've got a question here from Kathy. I've got a long question here ready, so prick your ears up, Ray, and you're going to have to listen to this one. Kathy says, and there's a few Kathys on. This is Kathy with a C. Kathy says, and good morning, Kathy, to you. She says, my daughter has property rental losses that were carried forward from the tax year 2016 to 2017. Can she use them to offset against her property rental income for the tax year 2017-18? I asked this because she was unable to enter last year's loss carried forward figure on her online tax return when she completed it.
Answer to that is yes, you can. There's no reason why she can't do that. She's probably got to just check what software she's using, and then there might be another box you have to go to put a manual amount in. So it won't automatically do it. Most software won't automatically carry losses forward. You have to go in and put the hard figure in that you wish to use. But yes, you can carry those forward until they're used.
Good stuff, good stuff.
Only against rental income. My caveat, you can only carry losses forward against the same type of income.
Okay, good stuff, good stuff. Andrew's put a comment and he said, this is excellent, exclamation mark. I don't know if he means you and I, Ian, or Ray. I think it's you and I, to be fair.
He can't be talking about me. No, it's you two. Sorry.
It must be. Oh, he has put Ray in the box, but he says Ray has answered both questions I had. Thank you for inviting him on the show. All right, Andrew, don't big him up too much.
Wow. I'll meet you in the pub later, Andrew.
Excellent. We got a question in from Ash here. He talks about SIC codes, SIC codes for companies. Should I start two separate companies, one for flips and one for holds? Or does it depend on the ratio of flips and holds? Do I just open one company?
So you can form a company and put up to 4 SIC codes on that company when you set it up. So I would just say set one company up, put 2 SIC codes on there, and then when you know exactly what you're doing, extract the one you don't want. So they are quite important, SIC codes, though, because if you go for lending or somebody looks at your business, if you've put down that it's a rental business and you go to a bank and try and raise funds for a property development business, they'll say, we can't lend it to that company, it's not registered properly. So on day one, I'd put 4 codes down and to cover yourself against anything you might want to do.
But I guess the other thing, your previous comment applies about the lender, you want a single SPV because it's nice and clean. So I guess when you're borrowing commercial funds, you just kind of want a single SPV, one limited company.
Correct. But when if you're setting a company up and not knowing what you're doing with the company on day one, but you just want to get it all boxed off, get a bank account, VAT register, blah, 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 then just put all the codes down and that'll just cover you.
Covered it. Brilliant. Thanks, Ray.
Good stuff, Ash. Hopefully that has answered your question on this wonderful Saturday morning. Blimey, we're getting through them. Let's fire another one at you, Ray. Ray, Jane has a question for you. So, Jane, good morning to you. She says, hi, Ray.
Hi, Jane.
There you go. Look at that. We've got a little system going here. She says, I have a few single buy-to-lets in my name. Can I rent them to my limited company to avoid clause 24 implications? Thank you.
Yes. I mean, essentially, you can create your own management company that manages your property as long as everything is done at arm's length, so that the rent is the same rent commercially, the fees for siphoning management charges off to a limited company are 10%, 12%, or 15% at probably most to fully manage a property. So yes, you can, but as long as you keep all the recharges at a commercial arm's length, then the revenue they can't have an issue with it. So I hope that answers the question. I think what she's referring to is where the interest clawback now is meaning that individuals are getting a higher rent profits because they can only claim a percentage of the interest now against rent, not all of it, as we could 3 years ago. So that's profits individually, which might be at higher rates, I assume. So trying to mitigate that higher rate tax by shifting it sideways into a limited company, which you can do, again, as long as it's commercially done, and you have to have paperwork to support it.
Brilliant.
So
that question.
Hopefully that's answered your question, Jane. Let's have a look on here. Just a couple other comments that come in just now. Kathy, you answered Kathy's question about her daughter. She said, brilliant response, Ray. Thank you. Ash says, thank you guys as well. So that's good.
I was a bit worried because Kathy, my wife's sitting at home probably watching this. I thought she was phoning in to wind me up.
It could be. Maybe Kathy's just testing you here,
yes.
Ray. So,
we've had a question come in. What do you want for lunch? That might be yours.
Right.
We've got one from Anthony. How many years can you carry losses in business forward for?
There are lots of different types of losses. Limited company losses, personal losses. On the whole, losses can be carried forward until they're used. Losses carried back, there's always a time limit or restriction on them. So again, not knowing what type of losses there are, yes, if he talks to his accountant or sometimes, just talk to the Inland Revenue, if you don't have an accountant, just they have a decent helpline, and they will say yes, as long as you put that in the box on your tax return, that's allowable. So I hope that's answers that question.
Okay.
Sounds like good news.
Ray, just to wind the clock back, if we can remember, Maria asked the question earlier, because she's got a follow-up here. She asked the question earlier, which was, I loan my company to buy properties. Can I withdraw the loan any time, or do I pay my tax on profit and then take out the loan? If you remember that one, Maria's had a follow-up. If you can follow this trail, I'm trying to follow it on here. She said, on my previous question, I forgot to mention I receive a salary from my company, $8,500 per annum. So do I still use my $12,500 allowance before I get my loan out of my company?
Yes, I would. If that's the only source of income, $8,500, and your allowance for the year is 12, then you need to top that up with a dividend or put your salary up to at least 12,000, because for every 1,000 you pay in salary, you'll save 19% in tax. So you're wasting that allowance, and you can't carry it forward. So I explain to a lot of people, always at least use your personal allowance every year.
Great stuff.
Fantastic.
Just referring back, Anthony said thanks for his answer. Also, Jennifer said thank you for the advice. It's nice to feed these back to you, Ray, because people are appreciating what you're doing. I love Jane's comment. Jane says, yes, awesome 1-minute answer to save me loads of money, exclamation mark, exclamation mark, exclamation mark. I love you guys. Thank you, Adventure Jane, whatever that means. Ian.
Thank you, Jane. I've got one in from Malcolm. I'm about to purchase a retail unit with a flat above. Can I apply for capital allowances after the purchase is completed?
So explain again, Ian. A commercial downstairs, resi upstairs. Yeah.
Retail unit with a flat above.
Okay. Is there any detail there? Is the intention to develop that site, or just buying that as an investment?
Let's assume that we're going to develop. Well, it doesn't say, but and Malcolm, please do fire in a follow-up if you want to just clarify the situation. Let's assume that it was. There
is no issue with claiming capital allowances on that, and the capital allowances, I assume, will be on the commercial venture below. But I think what Malcolm may want to look at is if he's keeping either part of those, splitting that purchase into 2 companies. You could buy the commercial element in a limited company, keep that separate, claim all the capital allowances. You could then buy the residential in another limited company and develop it, or again just hold for a long-term investment. Commercial and resi are, they're different animals, different types of investment. So having them in 2 different pots may mean eventually you may just sell the commercial element, or give someone a 50-year lease if you bought the freehold. And again, you want to have that potentially in a separate limited company. So again, if you talk to your lawyer on the transaction, they'll be able to tell you how you can structure that.
Fantastic, great answer. And yes, Malcolm said yes, he's going to develop and flip. So no, fantastic advice, Ray. Thank you.
And Maria says thank you very much, Ray, for the advice you gave her earlier. Okay, I've got another question up here, which I've just scooted over from Kathy again to come back. I don't know whether this is the same Kathy or a different Kathy, or whether it's your wife.
I'm working, Kathy, I promise.
Anyway, Kathy says, can I claim tax relief on the costs or a property deal that fell through? Good question.
Yes. What I say to clients is obviously keep a note of all of those costs and then bring them into the next transaction that you're about to do. So, which is why I say to a lot of people, set an SPV up, which is a limited company. You may have to put your own money into a bank account on day one, £1,000, £100, and then you can pay those costs out of that limited company, and the losses are in the first year. And again, you would carry those losses forward to the next year for when a property deal happens. So again, as long as you can keep those separate, don't necessarily have to do a limited company, but if you're going to be doing this seriously, you want to be opening up a separate bank account to prove it is a business account, and then put the costs through that business account, and you've got records of these losses which you will be able to use.
Good stuff. Okay, Raj has put a question. I don't think we've done this one. This came in a bit earlier, Raj, so I've just skipped over this one. If I am repeating myself, then I apologise. I am in my senior year, so I have an excuse. Raj says, hello, A-team. Could you please, Ray, you can be included in our A-team for today. Ordinarily, you wouldn't be.
Thank you, Raj. By the way, I'm a lot younger than Richie and Ian. I know he doesn't look it, but I am.
It doesn't look it right. You're right. You're right, Ray. Okay, hello, A-team. Could you please briefly explain the mechanics of a holding company, SPVs, then the project as a three-tier structure?
Okay, so the reason why you have a holding company is that you want to be doing more projects than just a single deal that you're on now. And if you do a deal in an SPV now, you buy it, you develop it, you sell it, the SPV ends up being a bank account with a load of money in it, hopefully, because you've done it well. Now, you want to extract that money for yourself, you'll pay a lot of tax, personal income tax. If you wanted to say, no, I don't need that money we've made, I want to bounce it into my next development, then you want to avoid paying a huge amount of personal tax to then put it into another property deal. So what we recommend is that clients set up a holding company on day one, which owns the shares in the SPV. So you may have Raj Holdings, which owns Raj Trading. When Raj Trading finishes, it pays its taxes, corporation tax, and then it's allowed to push the money up to the holding company as its dividend for owning the shares. But when the holding company receives that dividend, it doesn't then have another tax bill. So it can then loan that money out to Raj 2 Trading and avoid that high personal tax issue. And it also allows, when you have a holding company, to get people to invest or put money into the holding company on a separate deal for a return of interest, blah, blah, blah. And they're not involved in an SPV, which has got lots of liabilities and it's a trading company. So on the whole, the holding company is more for pushing the profits up once you've completed the deal on the SPV. So I hope that helps, Raj.
Fantastic. And I presume, Ray, then with the holding company, you can have members of the family that are directors of that holding company and then draw dividends down when you do want to take money out and pay them based on what you want to pay them.
Yeah, I mean, the holding company concepts come into play over the last 5 years, where the revenue used to allow you to finish a deal and then liquidate the company and pay 10% tax. So every builder you know or developer was just doing a development, shutting the company down and taking their money at 10%. Now you can't do that. The holding company does allow you to retain the profits at a lower rate and distribute them at lower rates. So yes, in a holding company, you could put your wife, you could put your partner, you could put your children if they're over the age of 18, and distribute the wealth amongst your family. Don't try and get it back if you pay it to your children, though. So just be aware of that.
Right, I'm going to throw one last question in, guys, as a conscious of time. And the lucky winner of the last question is David. David, good morning. David says, I'm currently applying for planning permission to build a 4-bed house on my own front garden, my main residence. What is the best way to deal with this from a tax perspective?
Okay, David can hive off, as long as it's his principal residence, which I assume it is, he lives there, he can hive that bit of land off and just sell it as, I mean, there's a size limit. I mean, he can't sell off 20 acres, assuming it is a small front garden. He could sell that to a developer and there wouldn't be capital gains tax on the fact that he's selling part of his own principal residence. He could set an SPV up himself and transfer that part of the garden into that and do a JV with someone like a builder to build that house and then split the profits. So he's got quite a lot of flexibility. Again, if he talks to a good accountant who understands how this works, he won't be hit with a massive tax bill just because he's developing his garden, because it's his principal residence, which is the main thing, which allows him to get a lot of allowances for avoiding capital gains tax. So again, that's quite sort of general advice on that, but it's doable. Yeah.
Great stuff. Great stuff. Guys, look, we don't want to overrun. We like to get you guys away. So we're going to leave that as the last question. I'm sorry we haven't answered all your questions. There is a stack of questions here. Give us a hands up if you'd like us to get Ray back again. No, Ray, there's no hands gone up. No one's interested.
Ray. Okay, I thought
Ray,
Kathy put a hand up.
No, she didn't. So that can't be the wife, or maybe it is the wife. That's why she hasn't put a hand up. Ray, what's your contact details if people want to contact you?
If they want to send me an email, send an email to Ray, R-A-Y, at freshaccounting.net. So Ray at freshaccounting.net. And if they want to look at my website, it's www.freshaccounting.net. Drop me a line and I'll come back to you.
Great stuff. But just as an aside, say again, Ray.
Thank you very much for inviting me, and I'm looking forward to this sumptuous lunch that you said you'd send round to my house.
It's a virtual lunch, Ray.
It's a virtual lunch. Apparently there's a knock at the door. It's arrived.
Just as an aside, guys, as a bit of a warning, Jenny said that she's already emailed Ray through his website KMA. Ray used to own and run KMA. That's now transitioned into Fresh. So don't email Ray through KMA. Use the number, the reference that he said. We'll put it up in the show notes, guys. So that's good. Ray, some great comments coming in. People are liking what you've done. Raj says, Ray, you're the man. Thank you, says David. Thanks, everyone, says Alan.
Let's
have a look. Brilliant session. Thank you, Ray. Great session. So valuable, informative. Thank you, Ray. Ray, they like you. They like you, Ray.
Well,
let's say goodbye to Ray. Ray, thank you for coming on. Will you come back again, Ray, at another time?
Anytime. It'd be a pleasure.
Thanks, Ray.
Thank you very much.
Fantastic.
Guys, how good was that?
That was brilliant. That was really good, wasn't it? Do need to say just one thing, obviously, in terms of financial advice, the usual rules apply. So obviously we can't give you advice on this show, even via Ray. So do go and get the advice of your property accounting professional. But I think one of the things that came across from what Ray was saying there is probably a couple of things. One is that, getting somebody that knows their stuff on the property side could well be worth your while, even if maybe your existing accountant is great at doing the stuff that you've done up to now. If you're new to property, then perhaps getting somebody with that extra advice. But also, it sounds like getting in early and setting things up is certainly better than doing it retrospectively at year end when you're thinking, I wish I'd have done that, or I wish I'd have known about that. So having those earlier conversations probably pays dividends.
Great stuff, guys. I'm afraid that's it for this episode of Open Door. Hopefully you found it useful. As always, guys, we love to build this community. We love you.
We do.
No, you're supposed to say it back. Everyone out there, not you, Ian. You're supposed to say love you too. Let's try it one more time. We love you. Oh, I can hear them now. They're all saying it. Guys, look, if you know anyone that you think would benefit from this, then please invite people along. It's totally free. As you always know, we never say anything, and we give you good, honest, straightforward advice with no BS. So please invite anyone along. That will be great. Share us on social media. So if you see us on social media when we post about the show, please share it in your groups. That would be appreciated. I know we had a lot of new people on today. It's great to reach out to people. We absolutely love it. If you're not in our Facebook group, it's the only area really of social media that Ian and I contribute to, then you're more than welcome. It's called Business Owners Creating Wealth Through Property Development. Business Owners Creating Wealth Through Property Development. Send us a link and we'd love to link up. Tuesday show, Tuesday night, 7 o'clock. We do these shows on Tuesday and Saturday. We have Paul Sams on Tuesday.
Yes.
So we have a commercial property lawyer on Tuesday to answer all your questions. Those that know Paul, he's a bit of a character, a great friend of ours, a great friend hopefully of the show. So we look forward to seeing you Tuesday. If you've liked the show, please let us know in the chat box as the final bit. Raj from Property Investor News, Property Investor News, Property Investor News, Property Investor News. That's 7 times Raj done that today. He says, love you. We love you. Love you too, says Yvonne. We love you too, says Trish. Thank you, says Simon. Slightly more formal there. Thank you for that, Simon. Thanks very much. Have a great weekend. Speak to you on Tuesday, Ian, says Trish. Not sure what's going on there. Ashley says, what's the private Facebook group again? Are you ready, guys? It's Business Owners Creating Wealth Through Property Development. Great stuff. Thanks, chaps. Appreciate that. Love you, says Nina. Nina says, thanks for a great session, guys. Apologies for the late log on. I was having technical difficulties. And many thanks, Ray. Great advice. Simon says it was socially distanced. Thank you. That's okay, Simon. Fantastic, says Dave. Dom says, thanks, chaps. Thank you. Thanks for listening. Have a great Saturday. See you on Tuesday. Goodbye.
Bye.